Welcome to The Explainer. Today, we're doing something a little different. We're putting the entire crypto market on the examination table for a full medical checkup. We're going to look right past all the daily noise and find out what is really going on under the surface.
So, that's the big question, right? Beyond the price charts that flash green and red every day, beyond all the hype you see online, how healthy is this market, really? Is it in peak condition, or is it maybe at risk of a sudden heart attack?
To get to the bottom of this, we're going to treat it like a complete physical. We're going to check its vitals, we'll analyze its circulation, and then we'll run a full stress test to look for any underlying conditions. So, let's jump right in. Okay, first things first, we've got to check the vital signs. This is going to give us that high-level snapshot of our patient's overall condition right now. You can think of this as the nurse coming in to check your weight, your temperature, and your blood pressure.
The first number on the chart is our patient's weight, and it's an impressive $2.44 trillion. This just gives you a sense of the sheer scale we're dealing with here. This is a truly massive and significant asset class.
Now, of that massive total weight, you can see that Bitcoin makes up more than half. At 53.6% dominance, it really is the heart and soul of this market. So, its health is a pretty primary indicator for absolutely everything else. Next up, we're taking the patient's temperature, which in this case is the market sentiment. With a score of 63, we are firmly in greed territory. Now, that means the overall mood is optimistic, but as any good doctor would tell you, a little too much excitement can be a risk factor all by itself. And this chart here shows us what our patient is really made of. So, after Bitcoin's huge share, we've got Ethereum at about 17%, a pretty big chunk for other altcoins, and, this is crucial, over 11% in stablecoins. That stablecoin slice, that's like the cash reserves sitting inside the system, ready to go. Just like a healthy body needs strong circulation, a healthy market needs strong capital flow. So now, let's analyze the market's blood flow. Where is the money moving? How fast is it moving? And is that a sign of health or distress? And what's really fascinating is this kind of institutional blood transfusion that's happening as we speak. I mean, look at this. In just the last 7 days, we've seen massive inflows into both Bitcoin and Ethereum ETFs. This isn't just everyday speculation. This is significant institutional capital pouring into the market. So the most important point here is, this isn't just a one-time thing. These consistent ETF inflows have become the new, steady heartbeat of the market. They create what analysts call a structural bid, which basically just means there's a constant source of buying pressure that's providing a really strong floor for the market. And the good signs don't stop there. The stablecoin supply is up, which means more purchasing power is sitting there on the sidelines waiting. And at the exact same time, the amount of Bitcoin just sitting on exchanges is going down. That suggests investors are moving their coins into safekeeping for the long haul, which is a classic sign of bullish conviction. Okay, so the vitals look good and the blood flow is strong, but any good checkup has to include a stress test to look for those hidden problems. So now we're going to put the market on a treadmill, crank up the speed, and see if any underlying conditions pop up under pressure. To do that, we first have to understand a really key term, funding rates. Look, in simple terms, it's just a small fee that traders pay to keep a leverage bet open. And when that rate is positive, it means the traders betting the price will go up are paying the traders who are betting it'll go down. And right now, the market is overwhelmingly long heavy. That means bullish traders are paying a premium to keep their bets open. This is kind of like having high cholesterol. On the surface, everything seems totally fine, but it creates a significant underlying risk. A sudden negative event could trigger forced selling from all these leveraged positions, and that could create a nasty liquidation cascade. So our stress test flags 3 main items for the doctor's watch list. First, that high leverage we just talked about. Second, stablecoin concentration. A whopping 75% of all stablecoins are Tether, or USDT, and that creates a potential single point of failure. And third, the extreme volatility in the smaller altcoins, which can see absolutely massive drops on very low volume. All right, we have checked the vitals, we've analyzed the blood flow, and we have run the stress test. It is now time to pull all these results together and give a final diagnosis for the crypto market. And here it is. The patient is healthy, but with a notable condition.
The market is in a really strong uptrend, and it's being driven by that powerful new heartbeat of ETF flows. But that high leverage is a persistent caution flag. So you could say the patient is fit, but probably shouldn't be overexerting itself.
So, based on that diagnosis, here's what the doctor thinks happens next, the prognosis. The most likely scenario, with a 60% probability, is a slow grind higher towards about $72,000 for Bitcoin. Now, there's a 25% chance of a full-on bull run to 90K, but there's also a 15% chance that all that leverage unwinds in a sharp correction down to 53K. And that really brings us to our final takeaway. This checkup reveals a market that's fundamentally healthy, with a brand new, powerful force of institutional capital propping it up. But it also has a pre-existing condition, a serious reliance on leverage. And that leaves us with the ultimate question. Is that new, steady heartbeat strong enough to withstand the inevitable stress tests that are sure to come?